Welcome everybody to the April 2024 edition of the Idaho Department of Labor's Labor Market Insight Series. My name is Craig Shaw, and I'm the Labor Market Information Research Supervisor at the department and your host for our webinar. Today we have a special treat, special guest, Matthew Hurt. He'll be taking us on an exploration of his analysis of Idaho migration. Matt is an economist working for the Idaho Division of Financial Management, and he's been there since 2022. He has a Ph.D. in economic history from the University of Colorado, along with undergraduate degrees in economics and operations management from the University of Idaho, and an undergraduate degree in mathematics from Boise State University. Matt, thanks again for being willing to come and talk about your research on immigration, like we were talking when you gave this presentation to the Economic Outlook and Revenue Assessment Committee. I thought it was really interesting, and so it's great that we can share that with our audience on our webinar. But before we get to that, maybe you could tell us a little bit about your role at the Division of Financial Management, and why you became interested in finding out more information about people migrating into Idaho.
Yeah, of course. So I'll speak first about DFM and then talk about what's burned the interest in the topic. So Division of Financial Management, it's the chief economist, Dr. Gregory Pietmeyer, and myself, who are a small part of a small government agency, and our principal task is the forecasting of tax revenue. To facilitate that forecast, we also do economic forecasting, including labor market and demographic analysis. And we have a website. You can search Idaho DFM, and you'll get to our webpage, and we have publications that we produce on a quarterly basis. And those are economic publications. We also do some monthly and annual tax revenue ones. So if you're listening and you like what you hear today, I do encourage you to go look up Idaho Division of Financial Management, look up economic publications, and then you'll be able to find our quarterly economic forecasts. And if everyone listening to this call visits after today, then you'll probably break the server because we don't get a lot of hits since we're so tiny. In terms of why I was interested in migration, it really dovetailed quite nicely. My dissertation was about understanding how the American labor market evolved between really 1850 and 1950. And that, of course, coincided with the age of mass migration. And so when I started at DFM, we didn't actually do a direct migration forecast. For us, migration was really a residual. We forecasted population, births and deaths, backed into migration. Since I had that background in studying and understanding migrations, I was a little more familiar with some of the data that were out there. I built a new model, which is where you'll be seeing forecast data from, where migration is directly estimated. So instead, it's births, deaths, migration, and then you get population. Slightly different methodology. Models do produce slightly different results, but they both tell a very similar story. So without further ado, that'll be the game plan for today, talking about migration. So first, I'll explain why migration is important. And if you've been living in Idaho for a while, I probably won't have to try very hard on that one. Then I'll do an overview of some of the data that are available and some of the data that we use in our office, followed by an understanding of the historical pattern of migration going back to 1990. Then I'll present a forecast, and I'll end the presentation today with a discussion of income differences, as that's something that doesn't, I think, get a lot of attention and probably deserves more. So we'll start with, the big swing. Idaho is the fastest growing state since 2010. That's based off census data. So you really, why is it important? Because the state wouldn't be growing without it. Most of our population growth, over 90%, since that 2020 census has come from migration. And the state's added over 125,000 people since the April 2020 census. So in about 3 years, we've added another meridian. I mean, that is growth that is hard to ignore, and that growth has done a lot of the heavy lifting in the economic growth in the state. Additionally, we're expecting that state population will exceed 2 million by the end of calendar year 24, and that the census will confirm that in their December 2025 release. I'll talk about that on the data slide a little bit. Additionally, overall migration rates in the country are falling. So fewer people are moving within counties, fewer people are moving within states, but cross-state migrations, not just rates, but numbers are going up. And when we get to the income piece, you'll see we'll circle back to that, because I think that's an important change in the trend in migration that's taking place right now. Lastly, from a revenue perspective, migration is very important. In the most recent version of the model that's using data through March, migration is explaining 44% of predicted revenue growth through fiscal 2028. Meaning if we were to have net migration be zero from now until the end of fiscal 28, we'd be losing about half our revenue growth. That revenue growth allows the state to do things like cut taxes, for example. So I think everyone probably has an interest in understanding how migration is impacting the state and how it's contributing to economic development. Before I go any further, I'll also put a caveat that it's not the position of our office that migration is good or bad, or has been good or has been bad. The only position our office takes is that migration has happened, and it's been a principal driver of economic growth in the state. So in terms of the data, there are many sources that are out there. The ones here are ones that are publicly available. Anyone listening now could go hop on and access these data. There are also other data that aren't quite so easy to get a hold of that I can talk about briefly as well. Those include driver's license surrender data. There's a faculty member at the University of Idaho who we correspond with, who has access to those driver's license surrender data, and we compare how those map up to the data from these other sources. The Secretary of State's office also recently, a couple of months ago, released some data based on voter registration. And so those are other ways to get at migration data. There are also private firms that are using cell phone tracking data, purchase data, a lot of microdata to try to also get some higher frequency measures of migration. But in terms of what's available for you and me and everybody else at no cost, really the gold standard is going to come from the census itself. They have what they call their population estimates program. And every December, they release data for the prior fiscal year. Conveniently for Idaho, since we run on July to July fiscal years, that syncs up with their releases. So that's nice for us. In March, they will then release the data for counties, metropolitan and micropolitan areas for the same time period. And then in May of this year, we'll get city level migration data. Now, these are nice because they are pretty comprehensive and consistent, but all they tell us are births, deaths, net international, net domestic. If you look at this data, you have no idea where people are coming from. The American Community Survey is our first glance at attempting to answer that question. So again, pay attention to the timing here. December of 23, we get migration data through July 23. September of 24, we get composition data for counties and cities that are big enough along for every state. So part of the challenge of using migration data are the lags. These data come out with pretty hefty lags. I think that's why there's a growing market for these kind of micro cell phone purchase data that can get you higher frequency notions of migration. And then the ACS data, though, it's one that I'm a little bit less familiar with. The confidence intervals they have on some of the state-to-state migration are pretty big. So that's one that I'm still warming up to. Really, for us, our gold standard in terms of understanding the composition of migration is actually the IRS data. So the IRS has a program that's called Statistics of Income. And in April, so this month, fingers crossed, they're going to release their next batch of data for calendar year 2021. So of course, that's a big lag. But what's great about the IRS data are twofold. One, the IRS data come from people who actually file taxes. Considering that our principal task is revenue forecasting, we tend to care maybe a little bit more about the people who are actually filing taxes than the people who don't. In practice, the IRS estimates of population end up being about 80% of what the censuses are. So there is definitely a cohort being missed. But what's really powerful about the IRS data is that they give you county to county net migration, and they give you income breakdowns as well. So we can get a lot of really useful information out of the IRS data. And in fact, the first slides I'll be showing you come from the IRS. So what we have here for you are the number of migrants, both coming into Idaho and leaving. And that's data from 1990 all the way through 2020. A couple of things to take away. You can see some elevated bumps around the mid-90s and then around the mid-aughts. We see in-migration dovetailing around the Great Recession, but then really we see it becoming a lot more variable post-2015 and even the out-migration as well. But there's also a lot more distance, vertical distance between that in-migrant and out-migrant line. So net migration has certainly accelerated since 2015. And one of the things I hope you take away from this presentation today is that all the wave of migration we had around the pandemic did not come out of thin air. Really, it was an acceleration of existing trends that started around 2015. And we can also see that if we look at both churn and net. So net migration is what we ultimately forecast. That's in minus out. That gets a lot of discussion and it makes sense. That's going to be driving a lot of the economic forecasting we do. But in many ways, churn, which is the blue line that corresponds to the right-hand axis, that's the one we feel. Net migration is there's a new subdivision at the end of the block, or there's a new town emerging off the highway, but churn is my neighbor is gone. Maybe they're replaced by somebody from within state, maybe out of state. We tend to feel churn a lot more acutely. And what I think is really interesting is look how stable that blue line is from 1990 all the way through 2003. It hardly budges. It gets a little bit more variable between then and 2015, and then we see it begin to explode along with net migration. So not only is the net migration increased, but the churn has also increased as well. Sticking with the, we're gonna do one little pivot from the IRS data because this is a question we get frequently, and I really just don't know where to put this slide in the presentation, so we're getting it out of the way now. We're gonna start talking about what these immigrants look like. And again, one of the big questions is what's the age composition? Idaho is a state that doesn't tax Social Security. So there are some people who are concerned, are we having a lot of people move to Idaho who retire, who might then start adding additional costs to the state without paying taxes on the Social Security income? There's concerns about that. Our office has found using census data that migrants are much more likely to be of prime working age than non-migrants who are already here in Idaho. So the blue line is the percentage of Idahoans who are in the prime age working population. And what's interesting to note is that blue line is actually falling until about 2018, and then we see a recovery. That recovery is being driven by the fact that a lot of migrants are coming to Idaho or came to Idaho, and they were much more likely to be of prime working age. So while it's certainly you can go and find communities throughout Idaho where, okay, it does seem like a lot of people move from California or Washington state to retire here, but broadly speaking, migrants probably look more like someone like me, moving to Idaho in prime working age after finishing my Ph.D. at Colorado, came with my wife, also in that same prime age working component, bringing our child and then having another one shortly after moving back to Idaho. So that kind of migrant is really driving a lot of what we've been seeing over the last sort of 2 to 7 years. Okay, now let's go back to the IRS data. And so what I have for you here are Idaho's major trading partners. So I'm talking like an economist here, discussing migration in terms of trade, but it really does fit our models quite well. And what may surprise people who haven't spent a lot of time in northern Idaho is that since 1990, our biggest trade partner has been Washington state, not California. We hear about California a lot in the news, and deservedly so, but Washington state has made up a bigger portion of that churn than California has been. And those numbers are sizable, 500,000 people over 30 years in a state that doesn't even have 2 million people. That's a lot. Now, some of those people are probably being double counted. Again, going back to my example, I moved from California to Idaho in 2006 when I was 12 years old. So I was a California to Idaho migrant. I then moved from Idaho to Colorado in 2017. And then I moved from Colorado back to Idaho in 2022. One limitation of all of these migration data, they have no way of knowing whether anyone used to live in Idaho. So some people may be concerned, gosh, all these people are coming from out of state. Are they going to have Idaho values? Are they going to fit in with the community? It's highly likely those people lived in Idaho for years, and they might have gone somewhere else, and now they're coming back. That's something we don't know or have answers to right now. It's a question I've been looking at and hope to be able to answer one day. But for now, I can't tell you how many of those 500,000 people we've traded with Washingtonians are the same people, repeated multiple times. Idaho's biggest trading partners beyond Washington, California, close second, and then followed by Utah, Oregon, Arizona may surprise some people there. So generally, Idaho trades with the states that it's near. That's very common. In economics, we've found that migration fits a gravity model pretty well. And if you've taken a physics class or recall, gravity model says two objects are bigger, they're going to have more gravitational force. In other words, they're going to trade more with one another. But the distance between them drastically lowers that gravitational force, and it drastically lowers the amount of people that get traded. Where we see differences, though, are net migration. Yes, when we talk about net migration, it is California, California, California. Californians have made up more than half of the net migrants into Idaho over the last 30 years, an enormous drop-off between California and any other state. One thing that I think is interesting to point out is notice Utah's absence on that list. So Utah is our third biggest trading partner, but on net migration, there are many years where it's been net negative. We've sent more people to Utah than we've gotten. So the trade relationship between Idaho and other states is certainly varies. And intertemporally, there's also differences. The most recent data we have, California made up 22% of the churn compared to its historical average of 16.6, and made up almost 2/3 of the net migrants into Idaho compared to over half. So California was overrepresented. Washington and Oregon, their churn rate was pretty similar to the historical, but their net migration rates were both higher. So whereas net migration from the three Pacific Coast states, continental ones, might have been around 80% before, it's now closer to 90% in that most recent year. So really a lot of the migration we experienced around the pandemic was fueled by people leaving urban centers in those three Pacific Coast states. So we've talked about the total number of migrants, we've talked about how old they are, where they're coming from, but we can actually understand not just where they're coming from, but where they're going. So again, using these IRS data, we can look at the county destinations of migrants, and then using the Idaho Department of Labor regions, get to an understanding of, well, what parts of Idaho are trading with what other states? And again, that regional element shines through here. The two northern parts of the state are most likely to have migrants from Washington and to send them to Washington using those origin and destination columns. Utah, on the other hand, is the biggest destination for Idaho migrants in the east, south central, and southeast. And they're the biggest source of migrants in the east and the southeast. California is the biggest source for the southwest and south central. And because the southwest is the biggest part of the state, that California share shows up in the statewide figures as well. And again, it probably shouldn't be surprising if I've convinced you so far that location matters. Oregon has been the biggest destination for Southwestern Idahoans since 1990. So even within Idaho, we get some very nice evidence that, yeah, we should remember Idaho is a collection of different regions. It's not a monolith. And we can continue to dive even deeper. So what I have for you here is a map of all of Idaho's 44 counties and the growth rate since 2020. Darker means faster. So probably a couple of things pop out. You might see Camas County in the center of Idaho. That's the darkest green. It's one of our smallest counties. It's added about less than 200 people since then. So you do have to take these county growth rates with a grain of salt sometimes. But what's probably important is Ada County is not one of our fastest growing. Canyon County's grown much faster. And the fastest growing counties actually are ones that are north of Ada County, still part of that, if you're charitable, Treasure Valley Metro or Southwest region, but also right at the top of the Panhandle. Bonner and Boundary counties are some of the fastest growing in Idaho. So there really has been uneven growth across the state, even within regions themselves. So again, there's There's an unevenness within regions and who we trade with, and then where people are going. There's a lot of heterogeneity here that is certainly, from a researcher standpoint, very interesting. So now let's pivot back to those regions, and we're going to spend some time talking about the demographics of those regions and not just migration, although that'll still feature prominently in the discussion. So for those who maybe aren't familiar with the relative size of Idaho's regions, we've got the 2023 population there. So the Southwest, a little over 900,000, much larger than any of the other regions. The East, North, and South Central are all in that 200 to 300 range. And then North Central is the smallest. What I also have for you here is the change since 2020. And again, I want to stress this is population, not just migration numbers. And then we can see how much has the share of the state's population changed since the 2020 census. So the two regions that have seen their population share increase are the North and the Southwest, and the other regions of the state have shrunk relatively compared to their standing in 2020. But none of these are necessarily outrageous numbers. It's not that everyone is leaving home and moving to the Treasure Valley or moving to the Panhandle, but we are starting to see some of the impacts of that high level of migration. However, these regions have grown in a very uneven way. And so what I have for you here in the next table is the growth rate since the 2020 census of each region. And so it's worth keeping in mind, Idaho itself has grown around 7% since the 2020 census. So the only two regions in the state that have grown faster than Idaho overall are the North and the Southwest. We saw that their share of population was increasing, so that shouldn't be too surprising. But one thing I think is really interesting is to see how much of that growth is coming from natural increase, births minus deaths, and how much of that is coming from migration, in minus out. In terms of natural increase, the eastern part of the state clearly stands out. Births minus deaths have grown the East by 2.4%, still a lot smaller than how much it grew from migration, but much higher than any other part of the state. And one of the things that we do hear about is population growth rates are slowing down, birth rates are falling, there's an impending demographic crisis. We already talked about that somewhat when we were talking about the prime age work share of migrants. And so I think it's particularly interesting to see that North Idaho and North Central, if there was no migration, no net migration, those regions would actually have shrunk since the 2020 census. Now, a lot of that has to do with COVID. The pandemic resulted in much higher rates of death in those areas. But even in the most recent data for fiscal 23, North and North Central Idaho were still experiencing more deaths than births. So there are important demographic differences across the state that policymakers, businesses, planners would all be wise to keep in mind. And one of the things that I think is interesting is that migration number, because North and North Central have negative natural increase, North Central Idaho actually got the third fastest growth rate in terms of migration, 4.9%. as opposed to being the slowest overall population growth rate of 4.3%. So I think this really highlights how important migration has been for driving growth in that part of the state, both the North and North Central. And now we can go and talking about these high level numbers, it can be easy for your eyes to glaze over, and it's a lot of data to process. I understand counties, specifics can sometimes help crystallize these data. So across Idaho's 44 counties, 16 of them have had more deaths than births since 2020. So if you're worried about this demographic transition, there are certainly some parts of the state where that should be a more salient concern than others. I expect that number to actually fall as the decade goes on, again, in part because barring another pandemic, fingers crossed that we don't have one, I expect that to drop, but probably only to 12 counties, maybe 14. We're seeing a lot of stability in those mortality trends across a lot of our counties, and these counties tend to be some of our smaller and more rural counties as well that are experiencing these lower levels of natural increase. And to really sort of illustrate the importance here, Kootenai County, one of Idaho's larger counties, has seen 26 more births and deaths since 2020. That's within any margin of error. By the time the census releases 2330 data, could have been zero at this point. But that same area, that same county, 14,000 net migrants. So Kootenai County is not technically one of those 16 negatives, but at 26, that's pretty darn close. But has received 14,000 net migrants. So, I mean, it really, I think, illustrates how different parts of the state have been growing. Within Idaho, only 4 counties have had 2,000 or more births and deaths, and there's a big drop-off between 4th and 5th. And so those 4 counties are listed over here. And again, we can even see within those counties a lot of difference in how natural increase is going, and that gives you an insight into the age distribution and fertility patterns as well. So if we compare Ada and Canyon County, so Canyon County had 600 fewer net births, natural increase compared to Ada County, but less than half the population. A lot of the people in Canyon County are going to be younger. They're going to be having families. They've likely been priced out of Ada County. And so they say, I want to start a family, but I want to be able to own a home to do that. Well, I can't stay in Ada County anymore. I need to move out. We can also, if we look east, see Madison County, Bonneville County. So Bonneville County, again, has a little above half of Ada County's natural increase and around a quarter of its population. So really illustrating that difference in fertility pattern in eastern Idaho. And of course, Madison County is absolutely an outlier here, but having more natural increase than Bonneville County while having about 1/9 of Ada County's population and having more, a little more than half. I mean, is really stark. But again, migration is really important. Madison County is not one of the fast growers. A lot of people come to Madison County. Apparently they have a lot of babies and then they go move somewhere else. People in Madison County probably understand that better than I do. But if you're thinking about, building new housing or thinking about what kind of businesses to operate in the county, it behooves you to be aware of these trends. All right, now we're done talking about the history until we get to the income piece at the end. And instead, we're going to talk about the forecast. So what we have for you here is net migration based on the fiscal year. So these numbers are largely similar to what the Census Population Estimate Program produces. Our numbers can differ a little bit from theirs because when we get new data from Idaho, departments on deaths and births will update the data, but in general, they're very similar. And so sure enough, we can see the effect of COVID. We had 2 years of north of 50,000 net migrants after having 30,000 in 2019. Well, we had about 30,000 in 22. We had 20,000 in 2023. That was much lower than what our official forecast was. In part, I think that's because we were relying too much on labor market data. The Idaho labor market has still been moving at a torrid pace. We've since calibrated our forecast using data based on home sales that I think are going to give us a more suppressed forecast. And you can see the impact of those higher interest rates and mortgage rates here. Our forecast is stalling out through fiscal 25, and then we're seeing an uptick a little bit before kind of hitting an equilibrium value around 25,000 for fiscal 27 and then through the rest of the decade. So it's easy if you were in Idaho around the pandemic when we had close to 100,000 people move in 2 years. Are we in this new age of mass migration? And as someone who studied the old one, I can tell you definitively the answer is no. But I can also tell you that it's not that there's a new slowdown coming. The slowdown already happened. We've already experienced a migration slowdown in Idaho. We're not expecting another one to come in. We're expecting fiscal 24 and 25 to look pretty similar to fiscal 23. And that kind of growth might be easier for planners and decision makers to manage rather than that much higher level that we had around the pandemic. And if you don't believe me and you say, oh, Matt, no, I think it could be 50,000 next year. Let me first say, I don't think it'll ever hit 50,000 again. And there's a lot of forces at play that are going to make it hard for Idaho to ever see a net migration year like what we had around the pandemic. What I have for you here are decadal growth rates for global population, for the U.S. national population. Those come from the IMF's October report. And then Idaho's population forecast. Those numbers come from our office, and then the growth rate for the 20s, 30s, and 40s is from Moody's. We don't currently project Idaho population out to 2050. They do, so we're just using their number. And the thing to take away is global growth rates are falling. National growth rates are falling. When population growth rates are falling, it's harder to sustain those higher levels of migration. It just is. I don't think I agree with Moody's forecast for the 2040s being so much lower than the 2030s. I don't think it will be lower than the nation's. Idaho's growth has been higher than the nation's overall. I don't think that's going to change anytime soon. And there's a host of reasons why I'd be happy to talk about if there are questions there. But the notion that the growth rate is slowing down, I think, is absolutely appropriate. And I'm actually a bit of a skeptic when it comes to global population growth. I think that growth rates are going to come down faster than the IMF and other sources are predicting, in part because lately the IMF projections have always been overshooting what happens. And I feel like you can only cry wolf so many times before you need to accept reality. But I do think that both Idaho and the rest of the country and the world will experience slower growth as part of that demographic transition. I think you might say, 2050 is a long ways out, and it is, but that's when my kids are going to be entering the labor force, and that's going to be their prime age working years. So I'm certainly very interested in it. And there are entities in Idaho that do have to produce those very long forecasts. And so just being aware of those impending changes is useful to know. All right, so now maybe I've introduced a little bit of doom and gloom in terms of growth, but let me end on a note of optimism, perhaps. So what I have for you here, going back to those IRS data, this is adjusted gross income per filer on the left-hand side. It's tax season, so we're probably all acutely familiar with what AGI is and isn't. In 2 months, we might have all forgotten, but it's a useful measure of income based off the different groups. And so what we have for you here are the non-movers in orange, and then in and out movers. Now this is statewide, this is countrywide, apologies. This is for the entire United States. And I think there's a very important trend here that happened starting in 2016. So before then, in and out migration tracked very closely, not surprising when we're talking about the whole country. Somebody's in has to be someone else's out, but much lower than the non-mover AGI per filer. That's because migrants tend to be a lot younger than non-migrants, and the older you are, typically the higher your income as well. But since 2016, we've seen this really drastic acceleration in the adjusted gross income per filer of people who are changing state. Remember, I told you right at the beginning of the presentation, within state, within county migration rates are falling. Cross-state migration rates are increasing. And the people who are choosing to change states are increasingly higher income. So people are sitting around and saying, gosh, does it make sense to move? And largely the answer is no, unless I can move across state lines. And in Idaho, we've been a beneficiary of this trend earlier than the rest of the nation. So what we have for you here, similar pattern pre-2015. Your in-migrant number tends to be, in Idaho, it was always a little higher than the out-migrant number. So migration has for a long time been a driver of the state's economic growth through that channel, but lower than non-migrant AGI per filer. But all of that changed in 2015. There really was a magic number for Idaho. Since 2015, in-migrant AGI per filer has been drastically higher than out-migrant AGI per filer. The people who leave Idaho don't tend to have that high of an income. The people coming here do. And since 2018, they've had a higher income than the people already here. And I think that makes a lot of sense in a number of places, but one that is tied to our migration forecast overall has been housing markets. A lot of people have moved to Idaho to buy a home because that was unattainable for them, even at a very high salary, certainly by Idaho standards, in places like Los Angeles, San Francisco, Seattle. But as housing prices in Idaho increased, suddenly that marginal mover couldn't move to Idaho anymore and buy a home. Instead, it had to be increasingly higher income people. So while we do see migration sort of leveling off for Idaho. I think this trend will persist, and hopefully this month we get some more Idaho data from the IRS, and I can add 2021 to this figure, and who knows, maybe I'll be wrong and the gray line will dovetail drastically, but I don't think it's going to happen. I don't know that it'll keep growing that drastically, but I think it will remain elevated above non-mover AGI per filer, simply because housing is still more expensive in Idaho. It's still cheaper than a lot of those coastal cities, so there's still that channel at play, and there are a lot of other factors that make Idaho an attractive destination. There's also cohort effects as well. When people move from Los Angeles or from Seattle or from San Francisco or from wherever and they settle in Idaho, their friends back home figure it out. And they go and they say, man, it's so great living in Idaho. And then the friends say, oh, okay, I'll think about it. And so knowing that you have this community in the destination you're going to, it's been shown as a really important attractor for migration. So I do think even with mortgage rates staying elevated for a time, we're going to continue to see kind of a steady level of net migration, but it's going to be increasingly high income. And we can really see the importance of migration to statewide adjusted gross income in this table here. So there's a lot of numbers. We can just focus on the bottom two rows. So the second column is the net adjusted gross income. That happens because migration exists. So that's all the AGI that people are bringing to the state minus all the AGI that people are taking out of the state when they move. And then the third column is the non-mover AGI. And then on the right-hand column, or the rightmost column, is the share. And so generally that's trending up. But if we go back to those bottom two rows, so non-mover AGI 45 in 2019 and then up to 50 billion in 2020. Well, our office has shown that typically when people move to Idaho, their AGI does not drop off. Again, adding some evidence to the notion that people are not moving here just to retire. And so we went from 45 to 50 in 2019 to 2020. So we went up by 5 billion. Well, if 4 billion of that came from net migration from 2019, that means that migration explained 80% of the AGI growth we experienced in 2020, admittedly a very big migration year for us. So this really does, I think, illustrate how economically significant migration has been for the state of Idaho, particularly when we were experiencing very high levels of migration. The impact will, of course, fall off a little bit as we have the more 20 to 25,000 sustained levels of net migration, but it's still going to be significant. All right, so again, I've given you a lot to chew on, a lot of different data sources. The key takeaways that I'd like everyone to have are that net migration will continue to be around those fiscal 23 levels for the foreseeable future. So again, the slowdown already happened. There's not another one that's imminent. We also expect that these migrants will be increasingly high-income individuals, which will continue to drive economic growth in the state. But also, I hope I've convinced you and shown some evidence that both migration and demographic patterns vary across the state, and not just within regions, but even across regions, but within regions, even at the county level, even within county, if you want to get really deep in the mud. There are some really important and useful differences, and I think it always merits investigation into this kind of topic.
Very good presentation. Thank you for the insight there. That was really good. Reminder to the audience that if you want to input any questions, the Q&A button at the bottom is where you want to do it. And we did get two while you were talking, Matt. I didn't interrupt you. You were so good. It's pretty fascinating. In fact, one of the questions is thank you for your fascinating and thoughtful analysis. And then what are your thoughts on the reason for the slowdown in the population in migration after 2020, especially in 2020? I guess this last one is where you saw the rate drop down.
Are you talking about this slide?
Yeah.
Well,
yeah, sorry.
You're talking like deep 2050s, that IMF stuff?
No, I think just the most recent one from where we had 3%, 50,000 dropping down to 20.
Sure. So I think there were a lot of factors at play. Housing price appreciation is, I suspect, the biggest driver of that. We saw home prices in Idaho basically double in 3 to 5 years, depending on what part of the state you were in. And I do think that that was a major driver of migration into the state. As people, the pandemic hits, it forces us to reevaluate a lot of priorities. You also have the acceleration of work from home technologies, and suddenly the idea of, gosh, there's this big event that's disrupting a lot of things. Maybe now would be a good time to see if there's another place that I could live that would make sense. If you were in an apartment, you might have been nervous having, especially the onset of the pandemic when we knew so little. The notion of owning your own home, your own little castle away from the threat of COVID, was really appealing to a lot of people. There were also differences in how states handled the lockdown. Idaho recovered very quickly, and that was appealing to a lot of people who wanted to continue working and have the prospect of owning a home. So I think that drove a lot of the drop off. And I would really, again, view those 250,000 years, that was really a COVID anomaly. If you go back to 2019, we were at 30,000. Fiscal 22 is really a resumption of what was already a very high level of net migration. 30,000 was still pretty fast. And even with 20,000 net migrants in fiscal 23, Idaho was the fourth fastest growing state in the country. Even when we only had 20,000 a fiscal year, we're still one of the fastest growing states in the country. 30,000, that's enough to be top one, top two. So really the 50,000, and why I don't think we'll get back there, really was an anomaly. It was the result of people who had already been moving to Idaho because they knew they could get a home, and basically the pandemic comes in and a lot of people start pulling the trigger on that decision. They probably have been mulling it, thinking about it for a while. And the reason why we think that that number is not going to recover anytime soon is because mortgage rates are still quite high. When we moved from Colorado to Idaho, we ended up buying a home. Our mortgage rate's at 5.5%. If you have a sub 3% mortgage, you're probably not going to want to move right now in this market. So that's hurting the supply of housing. That's putting upward pressure on home prices. Home prices, you would, in theory, think that those would come down as mortgage rates go up, but they haven't really collapsed in Idaho like they have in some other places. Home prices are still fairly stable. And so I think all of those factors are going to explain why the migration leveled off the way it did, and I think are going to keep those rates lower going forward.
Yeah, thank you. That 50,000 in my job, I pay attention to these numbers as well, and that 3% growth is crazy. It wasn't the original number when it was released, by the way. That was a revision from the census. So it took them a couple of years to finally nail the number down, but it was that's really an anomaly. I think it's it'll be more of that'll be more clear as we go in the future, like you explained. But we did have a question earlier. You kind of got to it a little bit, but I thought I'd kind of maybe ask for an expansion on. You talked about the exchange, the churn with different states. As you were looking at that, obviously we have the ones we'd expect. Do you have any that in your data that you didn't include, maybe that you thought were interesting, or maybe there were any of this insight that uncovered something for you that was rather surprising?
I think Idaho is really kind of an odd duckling in what kind of region it belongs to. The census has cuts the U.S. into 4 different regions: West, Midwest, Northeast, South. It further cuts those 4 regions into 9 divisions, and Idaho sits in the Mountain Division. But we don't really do enough mining, and we do too much agriculture compared to any other state in that region, even compared to states like Montana, Wyoming, our neighbors. But at the same time, I don't think we really fit in with any of the continental Pacific coast states as well. So I think I was a little surprised to see so many of the mountain states showing up on that list. Like Arizona would not have been one of the first ones that came to mind. Colorado, again, I would have thought more of Idaho's neighbors. Texas is also up there. They're around like number 6, I think, for net migration. Florida, in the most recent years, you are seeing some of that. So certainly there's been a broad move across the country, people going to warmer climates, and Idaho is not known for its warmer climate. So certainly there are some Idahoans who are probably choosing to go to Florida or to Texas or to Arizona to retire. I mean, that does happen. Um, and with all the net migration numbers, it's, I think, so easy to focus on the in, and it's really easy to lose sight of the out. And so I would say what isn't being shown on these tables is that some of those same nationwide pressures that are sending people to the Floridas and Texases of the world do exist in Idaho. They're just dwarfed by how many Californians the state gets.
From the audience is, do we know if some of the in-migration are individuals buying second homes, potentially renting homes and apartments? And if we don't, how would we discover, is there data out there we could find that out with?
Sure. So I think that's one of the advantages of using IRS versus census data. So the IRS data are looking at your tax returns. So if I started the year in Colorado, so I moved from Colorado to Idaho in the summer, that's when most people move. And so the IRS could see, okay, I filed my 2016 taxes in Colorado and I filed my 2017 taxes in Idaho. Thus, there was a move from Colorado to Idaho. So it depends on where you're choosing to file taxes, which you have some discretion over because you can control how many days you spend in a particular state. So certainly that's some of it. And it probably impacts some communities more than others. So Blaine County, for example, where Sun Valley is located, if I were to show you a map of AGI per filer at the county level, I either have to throw them out or you get one giant dot and then a bunch of white everywhere else. So certainly that does happen. It happens in some parts of the state more than others. And that probably is folks like that are contributing to the fact that the population estimates based off these IRS data would say that Idaho's population is about 80% of what the census says. And it's well known that the IRS is undercounting. There's no one denies that. It's well known, well established, because a lot of people just don't file taxes. Or they don't claim a dependent like they could. So there's a whole bunch of reasons why. But I don't think there's really good data on that specifically. I would say you could go to the American Community Survey, the ACS. They have a ton of data on really specific things, and there may be something there. But in terms of publicly available data, I think that would be the best bet.
Thank you. And a question, how about data that incorporates migration trends for demographics of what the political views are for those immigrating or the churn?
Sure. So I would say we have that thanks to the Secretary of State's office. So I got excited when it got released because I was like, oh, is this more current than what we have now? And it wasn't, but it provides that different lens. So I would encourage you to go to the Idaho Secretary of State and take a look at those data. Certainly just reading articles about migration, it does seem to be that Idaho is getting more registered Republicans than perhaps the statewide numbers are. But I think there's going back to these values things, a Republican in California might look a lot different from a Republican in Idaho. I mean, a Republican in Idaho might look a lot different even within a city, right? It's a big tent party. And so there can be a wide range of views there. But I think there's some truth. I think there is truth to what the Secretary of State has found and what others have found, that there has been some political selection in terms of the migration into Idaho. It's not the only thing. The economic impacts are routinely found to be the biggest driver of migration. It's not politics, it's money. But it's certainly a factor.
Yeah, that phenomenon is well documented over the past few years. It's a nationwide event, so we're sort of getting our portion of that. So I guess one of the things you kind of touched on a little bit that I think is really interesting as well is kind of the and why I think Idaho is doing so well, and even like the Department of Labor's projections in terms of jobs, we're projecting Idaho to grow considerably faster, about a full percent per year more than the U.S. average. U.S. average for 2022 to 2020 or 2032 is 0.3, and we're projecting a 1.3. And I think the difference is the immigration. I think is the population is where Idaho has the advantage of that. People still want to move here, and your research is showing they're moving here to work. But you kind of referenced the global population, which I think is interesting. That by midpoint, that the global population is expected to start to decline a little bit. Do you want to talk about that a little bit? You talked about how IMF's forecasts are a little bit optimistic. So you think that's going to happen sooner than later then?
I do, yeah. That's a big topic. So I'll speak briefly. I do think that we will hit our peak sometime this century. And I think it will probably come sooner than what most of the consensus forecasts are. And I think there's a lot of reasons. Again, I have 2 kids, but being a parent is really tough. And it's like every year there's more reasons to not have kids. Again, I'm a parent. I love doing it. I love being a parent. I love my kids. It's great. Yeah, I think the opportunity cost of having children just goes up year after year. And those same kind of opportunities to have a fulfilling life without having kids are spreading faster than people are expecting, and cultural attitudes and norms are changing faster. So I think there's going to be a lot of downward pressure on fertility because of that. Even sort of accepting and ignoring the economic impacts, which we know are driving down fertility patterns because of the higher cost of housing, higher cost of childcare, and all of that. Those are obviously important, but I think that there's a cultural issue that does get addressed, but maybe doesn't get the weight it deserves. And again, that's honestly just a personal opinion. It's sort of girded by my experiences with other fellow millennials who either have started their families or who haven't yet, or who I think probably won't. And I think the census right now, if you look at their projection, I should say, the census, the Congressional Budget Office, I think they have a very optimistic growth rate in terms of population for the U.S. They're expecting later stage millennials to start having kids any minute now. And I feel like if you're 40 by now and you haven't had a kid, you probably aren't going to, because I'll tell you, I had my first kid at 27, and that was really tough. I don't think I would have, if I had had a kid at 40, I would not have had a second kid. I'll say that. So I think that matters, and people who've been delaying that decision are going to find out when it happens, and they're going to say, okay, probably a lot of people will say one's enough, but we'll find out. I may be wrong. Forecasters are always wrong. It's just how wrong you are and in what direction.
That's a topic for another webinar there.
Yeah, exactly.
All right, so I'm going to ask the last question. We're going to roll the 2 questions from our audience into one, and then kind of tag one I had for that's kind of related to that, which is, is there any data on immigration by race for Idaho, and if the demographics of Idaho's racial makeup has been increasing by percentage or changing? And then also, does the IRS ask for industry and occupation on these tax returns that you can analyze? And then my question that wraps up in that, is there anything missing from this data you wish you could know that the data just isn't there?
Sure. So first question, the ACS would be your best bet for race-based statistics. So there's none of that in the IRS data. There's none of that in the POP estimates program. The American Community Survey does have race-based data. That hasn't been a focus of our office, so I don't know if they have explicit numbers on attributing changes in the population of different racial groups sourced to migration or natural increase. But I mean, you can look at one year, look at the next, look at what the overall migration number was, and you can get a pretty good estimate. But I don't know if there's a direct number there, but it's one that's not hard to infer from the ACS data. And again, they're lagged, but they're not as bad as the IRS. The IRS data have no industry classification data like that. What they do have that's nice is they have income groupings and age groupings, so you can see what the age cohort mix is of migrants, and you can see what the income cohort is of migrants. They're fairly coarse to avoid identification issues, but I think they still do a good job. And then for me, I would love to be able to get some anonymized linked data that allow us to see how many of these migrants are people like me. Are they return? Are they, I have lived in California, I've lived in Idaho, I've lived in Colorado, I've lived in Idaho longer than anywhere else. I feel as if I'm not an Idahoan, I don't know what I am, right? I've spent so much time here. And so I think because those cultural issues can get wrapped up in migration, it'd be nice to know and say, oh, well, yeah, like turns out 20% of the people coming to Idaho had lived here before, or had lived here for a couple of years. I think there's ways to do it with IRS data or state tax data, but that's, again, it's on the to-do list.